Hello everyone, how's it going? So I'm just going to do a little video today, because I'm just trying to think like little tips that I can like share with you that are like not me teaching you as per se, because I don't want to go down that route. I don't think I'm ready yet, as I have said many times. But I do think I can share some tips, like little things that help me get my cogs rolling in my brain, the light bulb moment, things like that. And if I can just share maybe a gem or two every other week, every week, when they pop into my head, then yeah, that'll be great. That'll be great. So what I'm gonna do, I'm just gonna go from Monday to Friday. Might get a bit boring this video. It might not. You might find it really interesting. I find it really interesting how price moves. If that interests you, then that's how it's gonna be. That's how you're gonna be a good trader. But basically, I want to make the video is that because price doesn't just randomly move. It won't just be in a leg and then just stop moving or just reverse for no reason. It always has an objective to where it's going and why it moves. And if you understand this, you can understand where to obviously place your entries, where to take your profits, where to expect like pullbacks, things like that. And we use them using supply and demand or fair value gaps or liquidity sweeps. So obviously we trade supply and demand, then we've got the fair value gap imbalances, and then we have the liquidity sweeps. So, sorry, I feel a bit dizzy today. Just keep going a little bit dizzy for some reason. Right. So I'll start from Monday. So prices come down. What made it go up? What gave this reaction? Liquidity sweep. A liquidity sweep of this low of the previous week. So I've had a bit of liquidity sweep there. It's took the low of the previous week. It's had a reaction. Then it's come back down. What caused it to come back down? We've got an imbalance in here. 15-minute imbalance, 15-minute fair value gap. So it's tapped into that. It's covered half of it. And it's made it go down. Then what's made it go up again? You could say that that was a liquidity sweep. I'm not too fully sure if it went. Or you could say it was just a demand zone. And that's made it go up. Then what made it come back down? Another imbalance in here. And that's what it tapped into. 15-minute imbalance. And that's what's made it come down. Now what made it go up from here? Sure, if you scroll left enough, there will be something else. 1838. Right, let me just rewind this so I can zoom out. Right, so we've got that. Okay, so you've got your buy to sell or sell to buy wicks here. People you do use them as zones. You know what I mean? And that's what it tapped into. And that's what made it reverse. Bit of a crap zone. I'd have never used that. You'd have never guessed that, to be fair. But if you come back to here, there probably will be a good demand zone in it. Zoom in. Yeah, okay. Obviously, it's not the best. Probably would have never used that in my entire life or expected a reaction from it. Um, but yeah, it's caused a pretty big reaction. They must have been using the theory that their order box with the bank. The bank must have had a lot of orders in here, ready to push the market up. So There we have it. Jump back to the 15-minute now. Where was we? So that made that react up. Then it come back down because it was in an imbalance. Then it come back down, tapped into a demand, went back up, tapped into a supply, came back down, demand, went back up. Could argue that was a supply, came back down. Demand gone up. What's made it react off here? Supply, come back down, imbalance, come back up, supply, flipped. Could argue that this here was a demand because it had broken that. That's your demand. It's broken that. It's gone back up, come back down because of the supply. And then it's come back down into the extremes of this demand, taken this liquidity here, taken that liquidity there, and then gone back up. And it's tapped into a 15-minute demand up here, supply, sorry, and got a reaction. Tapped into an imbalance, reacted back up. Because that broke structure, we now have a demand zone printed here, but also took liquidity. What did price do? Come into this to go up. Just gone past that, swept all this liquidity up here, come back down into the demand. So it's a good exercise just to go through and do this with your charts. Like what made it go up, what made it go down. You know what I mean? It is really good. I forgot all about like even mentioning it before. But you know what I mean? If it's like if you grasp that price doesn't just move randomly, that something will cause it to push, then it was for me anyway. I'm not saying it will be for you. You might already know this. You might be like, shut up then. We already know that price moves, but there's always a reason behind it. If you're new to trading, if you don't know this, yeah, I'll just carry on for another day. Obviously, come back up here, supply zone. 4 hour tapped into it. Come back down. What's it tapped into? This 4 hour block that we'd marked up. But you could say it's like reacting off some of these. Got this big imbalance. So you got I sometimes use imbalances above demands. It's tapped into that. Taps into that imbalance. Come back up. This is a little bit of an imbalance, cause a reaction. So you get what I'm saying. Absolutely range in a minute. Look at that PA. That is shocking. That is shocking. But I just hope you get what I'm trying to get across here. I think that's a very good thing to do. Just go through your charts and just be like, oh, okay, this is what's making it move. And something might click. You might be like, oh, it seems to be moving a lot more when it's tapped into a 4 hour zone at 1:05 in the morning. That's not a thing, but you never know. You might find something, an anomaly that might help you with your trading when doing this. So, yeah, just a little tip for you. Price is always going to move. Like, so the minute price is coming up, what's it going to react off of? So you could say that's a sort of supply. I don't like this supply. It's not really broke anything. It's definitely trading between ranges, but it's broke structure there. So you could say, okay, that supply is broke structure. It's come up into here. And there we have it. So that could be what then causes that reaction. But then this is broke as well. That's now broke. So you could say, well, this is your demand here. So there we have it. So, right, well, I'm going to leave that with you. Hopefully the video's not been too long, 10 minutes long. Apologies if I've ate up 10 minutes of life and you're like, this is useless, but it is something cool. It is something to think about, like why is price moving the way it is. So yeah, enjoy your weekend. If I don't see you before, have a good one.